We're getting the breaking numbers now in CPI and housing starts. Let me first start with housing starts because they've come in quite a bit below forecast at 519,000. The expectation there was for starts to come in at 598,000. For building permits, also below forecast at 550,000. That means that housing starts have plunged by 11.7%. The expectation there was for a decline of 2%. On the CPI front, inflation, we've been talking so much about that in relation to Fed's QE2. Consumer price index, just a gain there of 0.2%, so pretty tame there. And for core CPI, pretty much flat. So again, we're getting some pretty tame inflation numbers. Let me get to Mike McKee, who's been looking through these through this data. And Mike, let's start with housing starts.
Housing starts, as you'd expect, bad news, but worse than expected. The drop more than we thought, 11.7%, almost all of it in multifamily apartment construction. It's a very volatile category, down 44%. Last month. Single-family homes dropped 1.1%. Given the fact that inventories are low, you'd expect at some point a little bit of a rebound, but there's just no demand out there. Builders figure probably going into the winter, we're not going to see enough to justify additional building, Betty. The real interesting number is in the consumer prices. We're seeing the lowest inflation rate ever on the core rate, just 0.6% on a year-over-year basis. That really scares the Fed. That's the kind of thing that they're trying to get away from. That's the whole justification for QE2. Much of that comes, as we saw in PPI yesterday, from new car prices, but also apparel prices falling. A bit of a surprise, Betty. Right. That underscores what Bernanke has been saying, right? That inflation is not the worry here. It's deflation. Deflation is the concern. They're so close right now, they're afraid any kind of shock to the economy might tip us into deflation. And as Japan found out, very hard to get out of that.